Here we go. I'm going to kind of walk you through how I trade these futures. And basically, I trade on a system which um, the goal is to get a 1-to-1 risk to reward out of every trade. So that means if we risk $500, we want to make $500, or 250. If we risk $250, we want to make $250. Vice versa. And the great thing about that is it's scalable. As your account grows, you can just increase the number of contracts that you trade. So a contract on the ES futures, I haven't looked recently, but it's usually around 14K that it takes to buy one contract. But what that does is it's about 4-to-1 leverage on the SPY. So if you had, it gives you, one contract is around about, I believe, 100 shares of SPY. If you and you get 4-to-1 leverage on that, so it just moves a lot more than if you were to trade the SPY. You could trade the SPY, that'd be fine, and you could use this exact same setup to trade the SPY. But you just get more leverage, and the prop firms trade futures because it does offer more leverage. So anyway, I'm going to explain the indicators first. Down at the bottom, you see we have a DMI and a TTM squeeze indicator. Think of these as a measure of the pressure on the market price. So if this yellow line is above here, that means that there's negative pressure on the market. And if the diagram or the histogram on the TTM squeeze is below this zero line, which is the green and red line here, that means there's negative pressure on the market. So when both of these have negative pressure, then that's inhibiting price from coming up. Just kind of think of it that way. There's a lot of technical things that go into how these are calculated and everything, but that's just kind of how I think of it. Is this is the pressure on the market. So it's very difficult to trade long in the market when the pressure is down. So typically we won't do that. Conversely, we can look across, say, like right in this area right here, the blue line is on top, and the histogram on the squeeze is above zero and blue. So blue and blue, that means that the pressure on the market is generally up. And so we wouldn't want to try and short there. We actually want to try and go long in those situations. So that gives us an idea what the environment is for trading the futures. And then this bottom one is actually a measure. I think of it as the momentum in this stock. So, it can have positive momentum, but if the pressure is negative, so here you would have positive momentum because the blue line passes over the yellow line and the histogram turns green. Positive momentum because of the green. This is above the zero line, and the lines across positively. The blue line above the signal line, which is the yellow line. So, but the problem is the pressure in the market is down. Okay, so even though the momentum wants to turn up, the pressure is keeping the price from going up, and you'll see that here. If you go up on the chart, you'll see above that the price tries to go up. The momentum switches and starts to swing upward, and the price starts to swing upward, but the pressure is down, and so this just makes a move that's very inhibited. So if we tried to go long here, we'd either get stopped out or we just wouldn't, we wouldn't make anything. And you always want price moving in your direction. Anytime it's kind of stalled out, then there's a good chance that it could reverse on you pretty quickly. So we're looking for a spot where the pressure is in our favor and the momentum is in our favor. And so if we were to zoom in on this chart, and again, you just hold down and click and pull across, and you can enlarge your chart. If you want to zoom back out, there's a little minus and plus on the magnification down here at the bottom right. But so now we've expanded this, and so we see here where the momentum turned positive, right? But the pressure was down. So ideally what we want to do is we want to enter on the first bar where the pressure on both of these indicators and the momentum is positive, and we have a green bar here. Okay, so that would have happened basically. If you look at the numbers are actually right here on this indicator. If you hold right over this little dot, you can see that the pressure, the blue number it's a blue number here on the TTM squeeze where this red dot is. Okay, and then not quite on this bar is there a positive number here. So this is the blue line and the yellow line, and we want to see that if we're going to go long, that the blue number is bigger than the yellow number. So that doesn't happen until this bar. Okay. Now, so we could have entered. Now here's the problem with this trade and why I wouldn't enter, is that we want to see these all kind of turn at the same time. If it happens really late on in the trade, a lot of times that move will fail. So again, we're looking for the pressure and the momentum to correlate at the same time. So in this case, I probably would not have taken this. Okay. So then we just sit back and watch, and most of trading is just watching. Okay. So we're looking across and we're looking across. We're watching the price as it goes, and basically, just kind of hanging out. And so we come back here. This goes back to the zero line again. The pressure is negative. Pressure is positive here. This is a very confused market. It doesn't know what it wants to do. We got negative pressure here. We got positive pressure here. We have a neutral momentum here. So we're just kind of sitting back and watching. Okay. And this is the middle of the night. This is pretty common in the middle of the night that this happens. So I'm going to fast forward here to when I start trading, which is like 6 a.m. Okay. The price becomes a little more reliable at 6 a.m. And as the morning goes on, it becomes more and more reliable because the volume picks up as people come in and they start to trade. So in the morning, usually I'll pick this up at 6 a.m. And so we go here, and as I pick it up, we're looking at 5-minute bars. This 5-minute bar, this is negative pressure, positive pressure here, and there really just kind of no momentum here. So still nothing there, okay? And as we come across, what we notice is all of a sudden on this bar right here, okay, the pressure on this DMI indicator, if you look at the number to the top left there, this bar right here, the blue number is bigger than the brown number or yellow number for the first time, okay? And so what we do with that is that means that the pressure on both of the indicators, the TTM squeeze and the DMI, has turned positive. We also have a MACD that's positive, and it's happened they've all agreed within a couple bars. So we're going to go ahead and we would enter on this, and what we would do is we would place our put our arrow right on the bar, in the top left up in here, okay, on this bar. It will tell you the high of that bar was 5253.5, okay. So if it breaks above that, we want to go long, okay. And so we'll come over to our active trader over here. And what we would do is we would put at 52.35. This is the price right now tonight, so this doesn't necessarily correlate. But at 52.35, we would put an entry order. So we click 1 for our quantity, and then we would actually click on this at 53.5, and that would put an order in for when this broke that the top of this bar that we would enter. As soon as we enter, we want to put a stop at the bottom of this bar. How do we find that? Well, we look at those numbers on the top left, and the low, or the L, is 52.51. So a quarter point below that, so 5250.75 would be our stop, okay? And so that's where it would take us back out. If this reversed and came back the other way, we would want to be out. So we have one bar of risk here, basically. That's about as tight as you can get. And then we're looking to get out of this when the price moves the length of this bar, okay? And so what we do is we look at the top. It says range of 2.5, okay, R 2.5. So we're going to put an order in up here to sell this, okay, when it moves 2.5. And we knew the high of this bar was 53.5 plus 2.5 makes it 52.56, okay? So we would put an order right here on this active trader at 52.56 to sell that one contract, okay? All right, and so that would automatically sell when it gets to 52.56, okay? And then we have to cancel the one at the bottom. Okay, we'll walk through this as we trade together, but 52.56, and you would have just made 250 bucks that quick. 5 minutes, 250 bucks, okay? So now we're out, we're even, we're flat, we don't have any positions on, and so now we're back to just watching again, okay? We want to find our next entry, so the next time that these indicators cross in the same direction again, we're going to enter the direction that tells us to enter, okay? So here we have negative momentum, we have positive pressure and negative pressure. Those don't all agree, so we're not going to enter there. Okay, and the next place where they all agree is right here. Okay, and so as we go across on this bar, if you look at the DMI for this bar, you see the line goes down right here. Okay, the DMI says that the yellow line is higher, still higher. It's hard to tell if you look just at the chart, but if you look at the numbers, There's 22.8 for the yellow and 20.32 for the blue. So that means that there's still a slight amount of negative momentum because the yellow number is bigger than the blue. Okay. And then if we go to the next bar, all of a sudden everything agrees again. So the blue number is now bigger than the yellow number. The pressure on the TTM squeeze is positive, and the momentum on the MACD is positive. So we do this exact same thing again. We look at this bar, we see that the high is 5259.25. We're going to put our entry on the active trader to the right at 5259.5, which is a quarter of a point above that bar. So we need to break the top of that bar. Okay. And then we're going to put our, we'll just sit back and wait and watch to see if it triggers. Sometimes they won't. Sometimes the price will go the way and it just never triggers. But if we wait, and you would have had to wait about 20 minutes on these, each one of these bars is 5 minutes, we would have had our entry right here. We're just waiting on it to trigger though. And so we come across, and bam, on this bar, it triggers. We would have bought one contract of the ES. Okay. Now we have to start figuring out, well, how do we want to get out of this? Well, we want to get out if it goes down too much, and we want to get out if it goes up goes up the amount of our entry bar. Okay. So our risk is this bar, and our reward, we want an equal reward on the top. So if we go back to this bar, the range was 4, and the high was 5259.25. That makes our target 5259.25 plus 4. So 5263.25. So we would go over to our active trader, and up here at 5263.25, we would put an order to sell. And we would also put one to sell if it goes lower. So we have our sell at the top, our sell at the bottom. It's just going to trade in this range, and we're going to see, we'll just wait and see which one triggers. Well, 3 bars later, here we are at 5263.25. It triggers. This moved 4 points for us. 4 points on the ES is worth 4 times 50 is $200. So you just made $200 in a matter of about 20 minutes. So that's how that works, basically. Always remember to cancel your order down here, though, because what you don't want is for this to go up here and then come back, and then you end up having an order down here to sell, and you end up short when you don't want to be. So we would have a sell order up here for profit, sell order down here to protect our risk. Once it takes the profit up here, you do need to remember to cut and to cancel this at the bottom. And I can show you how to do that as well. So just kind of work through a chart like that and just see how this momentum changes, okay? And as we go through here, you'll notice that like this bar right here, it's a really wide bar, but the same thing works here. The momentum went negative, okay? And if we were going to take this trade, we would have to wait until everything agreed, which would have happened clear down here, okay? And if we took this short, okay, this would be negative pressure, and negative momentum. And that all happens on this bar right here, okay? So we would have put our short entry at the bottom of this bar, and we would have put our stop out at the top of this bar, okay? So we would have entered lower this bar is 5253.25. We would put a sell order at 5253 even, a quarter point below it. And we would have put, and once that triggered, we would put a stop at the top of this bar in case it went the wrong direction. And then we would have, the range of this bar was 4.25. So 4.25 below this, we would have put a target to take our profit. Did that happen? 53.25 minus 4.25 is 52.49. Let's see, do the math here. 52.49. Did that happen? It sure did. 52.49 here. So we just traded. We made another 4.5 points, 4.5 points on the ES futures is 4.5 times $50. which would be for $225. So if we'd taken these trades this morning, we'd be up 600 and some bucks already, and it's only 10 a.m. So that's kind of how that works. So just kind of go through some charts, and I would just scroll across 5-minute charts, find it, look and see where all these things agree. Find out where you would put your entry, where you would put your stop, where you would put your target to take profit, and then just find the next one. Just scroll across and go through these, and you can see how this works. You know, we're just going for every $1 we risk, we're trying to get $1 reward, and that works mighty fine on the ES futures. So see how that works for you. If you have any questions, let me know. Talk to you later. Bye.